Okay, let's try and unpack this because,
Yeah.
wow, imagine watching a stock, MCTR, right? It goes from around, what, $4 a share to spiking over $30.
Yeah, in just a few days. Early June.
It's incredible. And the market cap, we're talking about it swinging from maybe $70 million to like well over $500 million. Again, just days.
Mm-hmm.
How does a company's value even do that? Jump that much that fast, especially when there's no massive obvious news about the business itself.
That's the million-dollar question, isn't it? Or maybe the half-billion-dollar question here.
Right. Welcome everyone to the deep dive. You handed us a whole bunch of sources on Ctrl Group Limited, ticker MCTR, and well, our mission here is to sift through it all. We want to pull out the crucial bits, the insights, to help you understand what might actually be going on behind those crazy price moves.
Trying to find the signal in the noise, basically.
Exactly. And hey, stick with us right to the end because we're going to share how you can get your own deep dive prioritized on a stock you're looking at.
Good stuff.
And while you're here, if you happen to be watching on YouTube, maybe take a second to hit like and definitely subscribe to the Stock Analytics AI YouTube channel. Helps us out a lot.
Please do.
Okay, so roadmap for today. We've got your sources on MCTR. First, we'll try to figure out the business itself, like what does MCTR actually do?
Mm-hmm.
Then we'll dig into the management team, look closely at the financials that should be interesting, gauge the market sentiment, see who owns the company, and then wrap it all up looking at the risks. Sound good?
Sounds like a plan.
Yeah.
And that volatility you mentioned right off the bat, it's key. That kind of move, so detached from fundamentals, it just screams market dynamics, doesn't it?
Yeah.
Something beyond just the day-to-day business. The sources definitely point that way for early June.
Totally agree. So let's dive in. Chapter 1, Understanding the Business. What exactly is Ctrl Group Limited, MCTR?
Okay, so MCTR, the company listed on the exchange, is essentially a holding company. It was set up in the British Virgin Islands, the BVI, back in 2022.
Okay, BVI Holding Company.
Right, but that's not where the action is. The actual business, the operations, that all happens in Hong Kong. It happens through a subsidiary they own completely called CTRL Media Limited. And that company's been around quite a bit longer, since 2014.
So wait, if I buy MCTR stock, I'm buying the BVI parent, which owns the Hong Kong operator.
You got it. And that structure, well, it's important. It creates this dependency. The BVI parent relies entirely on cash flow coming from the Hong Kong subsidiary. Any money the parent needs has to flow from Hong Kong.
Got it. Okay. So what does CTRL Media do down there in Hong Kong?
They're in the marketing and advertising game, integrated services, but their focus, according to your sources, is really specific, promoting mobile games.
Mobile games.
Yeah, and specifically targeting the local Hong Kong market. That's their niche.
Okay, mobile games in Hong Kong. How do they make money doing that?
They call it one-stop advertising services. Basically, they handle the whole campaign for clients, usually the game publishers or maybe other ad agencies. And they get paid based on performance stuff, how many times an ad is seen, how many clicks it gets, that sort of thing. They also work with influencers, YouTubers, KOLs, key opinion leaders, local celebs too. They pay them per project for promotional content.
So project-based, performance-based.
Yeah.
Not like a monthly retainer thing.
Seems mostly project and performance, yeah. And that one-stop idea covers quite a bit. Strategic planning, creative work. They even do in-house production for videos and animations.
In-house video production. That's kind of interesting for an ad agency that size.
It is. Gives them control. They also do value-added stuff that really shows their local focus, like localization, adapting ads with Hong Kong slang, local images, cultural bits. Super important for hitting that market right.
Yeah, it makes sense.
Plus social media management, tracking performance, and even, get this, tailoring cosplay costumes for game promotions, advising on market trends.
Cosplay costumes. Wow. Okay, that really hammers home the niche focus, doesn't it?
It absolutely does. They also handle placing ads digitally, working with influencers, using physical ads like terminals in malls or whatever, and managing events like booths at game shows.
So the pitch is basically, we do everything for your mobile game ad campaign, and we know Hong Kong inside out.
That's the essence of it, yeah. That local know-how is their big selling point, especially for clients outside Hong Kong, maybe from mainland China, trying to break into that specific market. They're the local guide.
And this niche? Is it crowded? Lots of competitors.
Well, they claim to be a major player with prominent market share in this specific slice HK mobile game ads. They say there are just a few market players.
A few? Could mean it's concentrated, or maybe just not a huge pie to begin with. What about their size? How big is the actual company?
And this is where things get really interesting, especially given the stock price. As of March 2024, the sources say they had only 20 employees.
20. Tuville. For a company calling itself a major player whose valuation just went over $500 million, that feels tiny.
It really does. It strongly suggests either a very, very specific niche, or maybe they outsource a ton, or they're super efficient. But yeah, that scale just clashes wildly with the market cap we saw.
Right.
And that small size, combined with what you mentioned earlier, the low public float, only 2 million shares trading freely, that's fertile ground for what the sources call meme stock dynamics. Doesn't take much buying or selling of those few shares to cause massive price swings.
So the reality on the ground is a small niche Hong Kong business, but the stock on NASDAQ was behaving like this, like speculative behemoth.
That disconnect is absolutely central here, based on your sources. Now, the market they're in, Hong Kong mobile gaming, the sources describe it pretty positively. Hot, growing, projected CTR, compound annual growth rate, nearly 8% from 2024 to 2027.
Okay.
And Hong Kong gamers apparently spend quite a bit. High ARPU, average revenue per user, over $330 reported.
So a growing market with big spenders. Sounds good.
It does sound promising, but there's a catch. The total size of that market in Hong Kong isn't huge, estimated around maybe 800,000 mobile gamers.
Ah, okay. Limited potential scale just within Hong Kong then.
Exactly. Which is why there's stated plans to expand geographically into Taiwan and Southeast Asia. That seems less like just a growth strategy and more like a necessity if they want to achieve significant scale beyond what Hong Kong alone can offer.
Makes sense. What about regulations? What rules do they operate under?
Well, they're under Hong Kong law, stuff like advertising standards, data privacy, the PDPO, and trade practices, normal stuff.
Right.
But a big risk, one they even flag in their prospectus, is potential interference from the PRC, from mainland China, especially around getting cash out of the Hong Kong subsidiary and up to the BVI parent. That's a known structural risk.
Okay, and being listed in the U.S.
That brings another big one, the HFCAA, the Holding Foreign Companies Accountable Act. This is the rule that could lead to delisting from U.S. exchanges if U.S. regulators, the PCAOB, can't inspect the audit work done by their auditors in Hong Kong. It's a risk for many Chinese and Hong Kong-based companies listed in the U.S.
Right, plus general trends towards stricter data privacy everywhere.
Yep, that too.
Is it hard for competitors to get into this space? High barriers to entry.
The sources suggest it's not about needing tons of cash or some unique patent. The barriers are more soft.
Soft barriers like what?
Like that deep local knowledge we talked about. Established relationships with media, with the KOLs, having a track record that proves you can deliver in that specific market.
So, hard to copy quickly, but maybe not impossible if someone was determined and invested.
Pretty much. Vulnerable over time, maybe? And the fact there are only a few players, again, might just mean the niche isn't big enough yet to attract the really big global ad firms.
Okay, so the broader mobile ad industry looks okay, but MCTR's future really hangs on adapting, deepening that niche expertise, and making those expansion plans actually work.
That sums it up well. The opportunities there, maybe, but execution is key, and those external risks are very real.
Right. Which brings us neatly to the people in charge. Chapter 2. Management evaluation. Who's running Ctrl Group? How do they stack up based on these sources?
Okay, leadership. You've got Mr. Chi Feng Lau as CEO. He's a co-founder, apparently has over 10 years in the industry. The CFO is Mr. Kawamok. He's a CPA, brings over 20 years in finance, which is definitely helpful for a public company, especially a foreign one, navigating U.S. rules.
Good experience there.
Yeah. And the other co-founders, Mr. Kai Kwan Lam and Mr. Chinpeng Siu, are directors. They also have independent directors on board, including chairing the audit committee, which is standard governance stuff.
And this team, they've been running the core business, CTRL Media, since 2014. And they got the IPO done in January 2025.
Correct. Successfully navigating an IPO, that definitely shows some capability. Now, a really big point from the sources is the insider ownership. It's really high.
How high?
Post-IPO, insiders, founders, execs held about 73.53% of the shares. They already held big stakes before going public.
Wow, okay. Nearly 3/4 owned by insiders. That usually means their interests are pretty aligned with shareholders, right? Their money is where their mouth is.
Yeah, in theory, that alignment is strong. They've got serious skin in the game, as they say. If the business does well and the stock goes up, they benefit massively.
But there's always a but.
But that level of concentration also means the founders have huge control. Decisions needing a shareholder vote. They essentially decide. Minority shareholders, the public ones, don't have much sway.
Right. What about transparency? How much can we really see since the IPO?
Well, their public track record is short, really just since January 25. And being a foreign private issuer means they report less frequently to the SEC than U.S. companies, usually an annual 20F report and 6Ks for material events. So things like how they'd handle a crisis or their ongoing investor relations approach, still kind of unknown territory.
Okay, so boiling it down, are they honest? Capable, shareholder-oriented?
Honesty. The sources don't raise any red flags. SEC compliance is the main check there. Capability, well, they've got industry experience. They pulled off the IPO. So capable operationally, seems like. The big test now is executing that expansion strategy. That's the future capability question.
And shareholder-oriented?
The huge insider ownership points that way, definitely. However, and this links back to the structure risk we talked about that BVIHK set up, plus the potential PRC risk, it means even if the Hong Kong business thrives, getting that value fully and reliably to MCTR shareholders could hit snags if cash transfers get restricted.
Ah, right. The plumbing between HK and the BVI parent.
Exactly. And they're not paying dividends currently, which is normal for a small growth company reinvesting. But how they use their capital going forward, especially that IPO cash, that'll be the real tell on shareholder orientation over time.
Okay, that structure definitely adds a wrinkle. Let's shift to the numbers then. Chapter 3, financial health. And we have to preface this whole section by saying the recent trading has thrown all the valuation metrics completely out of whack, right?
Absolutely. You have to keep that context front and center. That market cap jump you mentioned, 70 mil to over $500 mil, based on that $32.90 price on June 3rd, that was pure price action, not some sudden explosion in the business itself.
And the valuation ratios just reflect that absurdity. Price to earnings, the sources mention numbers that are just mind-boggling. Thousands. One source even said over 26,000 times earnings.
Yeah, it's staggering. If you take their net income for the last full year, FY 2024, it was tiny HK $1.9 million, maybe US $240,000. That works out to earnings per share of like maybe a cent and a half, 0.016 cents.
Okay.
So at $32.90 a share, that's a PE ratio of over 2,000.
6,000.
Yeah, it's not just high, it signals pure speculation, or maybe expectations of growth so massive it's just not grounded in anything we can see in their current performance. It really shows the disconnect. Some sources even reported negative EPS at lower prices, which just adds to the confusion. The market seemed totally lost.
And that disconnect gets even starker when you look at their actual revenue trends. Your sources show they're actually declining.
This is absolutely critical. For FY 2024, revenue was HK $40.7 million. That was down 14.3% from the year before.
Down 14%. Okay.
And it got worse. In the first half of FY 2025, the 6 months ending last September revenue was HK $17.61 million. That's down 25.6% compared to the same period the year before.
Wow. So revenue is shrinking and the decline is accelerating. That's the opposite of what a booming stock price suggests.
Precisely the opposite. And it's not just revenue. Profitability is getting squeezed too.
Margins are dropping.
Yep. Comparing that same first half of FY 25 to FY 24, gross margin went from about 33% down to under 28% operating margin. Plummeted from 14.5% down to 7.4%. And net margin halved basically from almost 11% down to 4.6%.
Ouch.
Yeah. Their TTM EBITDA margin, that's earnings before interest, taxes, depreciation, amortization, kind of a proxy for cash operating profit. It's modest, around 7.5%. But the trend is margin compression alongside falling revenue. That's a tough spot operationally.
Is there any good news in the financials? Anything looking better?
Yes, actually. The balance sheet is much healthier. That's thanks to the IPO cash.
Right, the cash injection.
Before the IPO, their debt-to-equity ratio was pretty high, over 4.5 back in March 24. But after raising about US $7.4 million net from the IPO and adding that to equity, the estimated DE ratio post-IPO is really low, maybe 0.25 or so. They have very little debt pressure now.
Okay, so less debt risk. That's something. What about cash flow? Are they actually generating cash from the business?
Well, direct free cash flow wasn't explicitly laid out, but the sources do show that their operating cash flow turned negative in that recent first half of FY 2025. They actually used cash in operations, whereas they generated cash in the same period the year before.
Negative operating cash flow.
Yeah, and given they don't seem to have huge capital spending needs, that likely means negative free cash flow recently too, which, given the falling revenue and margins, is definitely a concern.
And price to book, another valuation measure. Still crazy high.
Oh yeah. Way up there. Sources reported ranges like 160 times book. even up to 250 times. Even if you estimate the post-IPO book value against the recent market cap, it's still easily over 60 times book. Again, just emphasizes how far the price drifted from the company's tangible asset value.
Okay, so let's try to sum up the financial health picture. They are making a profit, technically, but it's small and it's shrinking, just like revenue. Margins are getting squeezed, the balance sheet is stronger because of the IPO cash, less debt, that's a plus. But the core problem seems to be the negative operational trends. Revenue, margins, cash flow.
That's exactly it. The underlying business seems to be facing real headwinds, while the stock valuation was telling this completely different speculative growth story.
That contrast leads us perfectly into Chapter 4, market sentiment. How does the market actually feel about this stock, and what's driving that feeling, if not the business results?
Well, the overriding sentiment is just extreme volatility and pure speculation. You saw it yourself, those daily jumps, hundreds of %. News reports were all over MCTR being a top NASDAQ gainer, hitting all-time highs.
Right. But the sources say there was no fundamental reason for that surge.
Exactly. They explicitly link it to retail investor activity, buzz on social media, FOMO, fear of missing out, classic meme stock behavior.
Amplified by the low float.
Definitely amplified by that tiny float. Takes less money to move the price when so few shares are actually available to trade. And the huge trading volume compared to the float, often without big institutions involved. That's another telltale sign of speculation driving the bus.
What about professional analysts? Are Wall Street firms covering MCTR setting price targets?
Seems like coverage is minimal to non-existent. One source just said NA for targets and ratings, another called it unranked. Interestingly, though, AAII, the American Association of Individual Investors, gave it an F for value way back in April.
An F?
Yeah, an F, calling it ultra expensive. And that was when the stock was only at $6.80.
Wow. So even at less than $7, it was seen as way overvalued fundamentally.
Exactly. And the lack of mainstream analyst coverage just means the price is even more vulnerable to sentiment swings and trading dynamics rather than being anchored by research.
So the biggest news impacting the stock wasn't the actual company news, like the declining financials.
No, the biggest news impact was the price surge itself. It created its own feedback loop. The surge got attention, which brought in more traders, which pushed the price higher, completely disconnected from the underlying business trends.
What about short sellers? People betting the price will fall.
The actual percentage of shares shorted relative to the float was reported as pretty low. Tiny, even.
Oh, so not many people betting against it.
Well, here's the twist. The cost to borrow the shares to short them, that was reportedly sky high, over 100% annualized fee in early June.
Over 100%. So it's incredibly expensive to short MCTR.
Extremely expensive, which suggests that some people definitely think it's going to drop, but the cost makes it a really risky, maybe even prohibitive bet for most. The options market was also apparently pretty underdeveloped, which isn't unusual for a small, recent IPO.
Okay, so sentiment. Dominated by speculation, volatility, meme stock dynamics, totally detached from fundamentals. Got it. Let's move to who actually holds the shares. Chapter 5, ownership structure.
Right. As we kind of touched on, institutional ownership, big funds, mutual funds, pensions seems very low. Some sources basically said zero or negligible.
So not the big money players.
No. The ownership is overwhelmingly dominated by those insiders we talked about, the founders and executives. They hold that massive 73.53% chunk.
Which confirms again, they have very strong control.
Absolute control, essentially. Public shareholders have very limited influence on big decisions. And something important to keep an eye on, the lockup period for those insiders, when they're allowed to start selling their shares.
Yeah, how's that?
It's scheduled to expire July 21st, 2025. So after that date, a potentially large number of shares could theoretically come onto the market if insiders decide to sell. That's definitely a date investors would want to circle on their calendar.
Good to know. And the governance angle here.
High insider control limits public influence. Being a foreign private issuer means less frequent reporting. And that HFCAA risk, the potential delisting over audit inspections in Hong Kong, that's a major governance risk tied directly to their structure and location. They have independent directors, sure, but the power is really concentrated.
All right, before we pull it all together, let's do a quick risk assessment. Chapter 6. SWOT analysis based on your sources. Strengths, weaknesses, opportunities, threats.
Okay, quick rundown strengths.
Hmm.
That Hong Kong niche expertise, the one-stop shop claim, experienced team, high insider ownership, lean structure, and definitely the IPO cash strengthening the balance sheet.
Misses.
Pretty significant ones. Small scale, limited public history, critically. Those declining revenues and margins, heavy reliance on just the Hong Kong market for now, potential client concentration, that soft competitive moat we discussed, the absolutely extreme speculative valuation, and the risks tied to that BVI HK holding structure.
Opportunity.
Well, growth within the HK niche itself, if it keeps growing. The big one is geographic expansion, Taiwan, Southeast Asia that could unlock scale, maybe using the IPO cash for acquisitions, and just generally benefiting from digital ad trends if they adapt well.
And threats. Feels like a long list here.
It is. You've got the big political ones, PRC oversight risk potentially hitting cash flow, the HFCAA delisting risk in the U.S., then competition heating up, rapid tech changes, think AI and advertising changing the game, tougher privacy rules, general volatility in the mobile game industry affecting their clients, any economic downturn.
Loss of key people.
Yep, key person risk in a small team. And maybe the biggest immediate threat, a sharp reversal in that speculative sentiment, causing the stock price to just collapse back towards, well, something more fundamentally justified.
You also mentioned an indirect risk from U.S. tariffs earlier. Can you elaborate on how that hits MCTR even though they don't export goods?
Yeah, it's an interesting indirect channel. Look, a lot of MCTR's clients are likely mobile game developers based in mainland China or with significant operations there, right?
Okay, makes sense.
So if those Chinese game companies get hit by U.S. tariffs, maybe tariffs raise their costs or impact their global profitability somehow. What might they do? They might cut costs. And advertising budgets are often one of the first things to get squeezed.
So tariffs hit the clients cut ad spending.
And that directly hits MCTR's revenue because their revenue is that ad spending from clients. So even though MCTR isn't directly involved in trade wars, macro stuff like tariffs can ripple through their client base and negatively impact their business. It's an external economic pressure adding uncertainty.
Got it. That adds another layer of risk. Sure. Okay, let's try to bring this all home. Chapter 7, conclusion. Based on this whole deep dive into your sources, what's the final picture for MCTR?
Okay, the sources paint this picture of a company with, a real business. It's niche Hong Kong mobile game ads, but it seems viable. They've got an experienced team. They successfully pulled off an IPO, and that IPO money definitely shored up their balance sheet, reduced debt. Those are positive.
But is a big but.
A very big but. The company is facing some serious headwinds, both inside and out. Fundamentally, that core business, it's shrinking right now, declining revenue, squeezed margins, in a relatively small home market.
Right.
Their main path to significant growth seems to be expanding into new regions, Taiwan, Southeast Asia. That's complex, competitive, and hard to pull off successfully. And on top of all that, you've got those significant external risks, political risks from PRC oversight, regulatory risk like potential US delisting, and even those indirect economic risks like tariffs hitting clients.
And then there's the elephant in the room. Yeah. The stock price itself.
Exactly. The biggest, most glaring factor right now is that stock valuation. It just seems completely, wildly disconnected from the underlying business reality and those negative operational trends. All signs point to it being driven by meme stock, hype, sentiment, low float mechanics, not by the company suddenly becoming incredibly valuable overnight based on performance.
So that introduces a massive risk purely from market psychology.
Huge risk. It's not tied to whether the business improves slightly or not. It's tied to whether that speculative fever breaks.
So if you're looking at this trying to be rational, maybe like a value investor, assessing the actual business value.
Yeah. From that kind of fundamental value-focused perspective, the sources strongly suggest the recent stock price levels were nowhere near sensible given the company's current performance, the negative trends, and all the risks involved. The speculative premium was just enormous.
Okay. So wrapping this up for you, the listener, what does this all mean? You've got this company, MCTR. It has a real, though niche, business. An experienced team, fresh cash from the IPO, that's one side. But the other side is a business facing fundamental declines right now, operating in a small market, with ambitious but challenging expansion plans, plus significant political, regulatory, and economic risks hanging over it. And, most recently, a stock price driven to incredible heights by speculation totally divorced from that operational reality.
This deep dive, using your sources, hopefully gives you the context to see both sides, the speculative mania and the underlying business challenges.
Right. And given that intense speculation actually brought MCTR into the spotlight, and they do have that IPO cash earmarked for expansion. Here's maybe a final thought to chew on.
Okay.
Can this management team somehow use this moment? Use the attention, use the cash to actually execute that expansion, build something bigger, more sustainable, something that could eventually start to justify even a fraction of that peak valuation.
Or is this whole episode just a textbook example of market craziness? Pure sentiment and mechanics taking over, completely detached from the business reality, meaning a painful correction is pretty much baked in once the hype dies down?
That really is the tension, isn't it?
Yeah.
Can reality catch up to the hype, or will the hype just evaporate?
Time will tell on that one.
Indeed. Well, thank you for joining us on this deep dive into MCTR.
Glad we could unpack it.
And hey, if you want more deep dives just like this one, please remember to subscribe to the Stock Analytics AI YouTube channel. It really helps us keep doing these.
And if you become a member, it's just €4.99 a month. You can actually give us a ticker symbol, and we'll prioritize doing a deep dive analysis on it for you, often right after the earnings come out.
Great way to get analysis on stocks you care about. Now, the necessary reminders.
Right. This report, this conversation, it's purely for informational purposes. It is absolutely not financial advice, not an offer to sell securities, not a solicitation to buy anything.
The content is based on the research snippets and public info you provided. Current as of the dates mentioned, specifically up to June 4th, 2025. We try for accuracy based on those materials, but we can't guarantee everything is perfectly complete or correct.
And yes, this deep dive might include some AI-generated content elements, and it's all based solely on your request and the sources you gave us.
Remember, investing always involves risk, serious risk, including losing your investment. You absolutely need to do your own thorough research, your own due diligence.
And talk to a qualified financial advisor before making any investment decisions. Past performance is never, ever a guarantee of future results.
The stock market, especially for highly volatile stocks like MCTR recently, is unpredictable. Valuations, sentiment, it can all change incredibly fast without warning.
And just to reiterate, all the analysis, all the conclusions here, they're based only on the information from your sources available up to June 4th, 2025.
Okay. Till next time, keep digging.